Yikes, you just found out that you're in an over-contribution situation with your RSP account. It wasn't intended, but it happened. Now you want to find out how you can deal with this over-contribution so you're not hit with this 1% per month penalty tax. So in this video, I'm going to interview Milan from our team. She's going to walk us through the steps to get that over-contribution dealt with. So you'll find this video, I think, very helpful if you're in this situation. Well, hi everyone. Welcome to our presentation today. We're going to talk about a topic that hopefully none of you have to deal with, and that's over contributions to your RSP accounts. We're going to cover them off because it can get pretty expensive, and it's sometimes a shock when you get a notice of assessment and you find out that you've made an unintentional over contribution. So in today's discussion, our special guest is Milan from our team. Milan has been in the financial services industry for well over 20 years. She's a chartered financial planner. She's a licensed security advisor, and she plays a really critical role in helping our clients develop financial plans, researching different topic areas to make sure they're making really smart financial decisions. So it's really great to have Milan participate today on this topic. Over contributions. If you find out you've made one to an RSP, what do you do? What are the next steps? So hi, Milan. Welcome to our session today.
Hi, Shaun. Thanks for having me. And welcome everyone to the session. Hopefully we'll get some good information out to you. So like Shaun said, not the best situation to be in, but hopefully we'll be able to kind of walk you through the steps of what needs to be done once you've discovered that you're in that over contribution situation.
Exactly. So I guess the first is an obvious question, but I'll ask it anyway. How do you know if you've made an over contribution?
Right. So the best place to go to is look at your notice of assessment, right? So your notice of assessment will tell you if you've made that over contribution situation. Now, one thing to note is you are allowed to go over by $2,000 of your RSP limit without any penalties. So that kind of gives you a bit of a buffer in case. Now, if you've gone over that $2,000 limit, though, there is a penalty, and that penalty is 1% for every month that you are in that over contribution situation. So as soon as you discover that you're in that over contribution, it's best to take next steps right away, so that way you can kind of defer, or not defer, but decrease the amount of penalties that you would have to pay on that excess amount. So best thing to do is look at your notice of assessment before you even make your contributions, so you know what you can put in as an RSP contribution. So what we've got in front of us here is a sample of that notice of assessment. And if you take a look at the bottom part of that assessment, it will tell you what your RSP deduction limit is for that given year. Now, one thing to note is when you take a look at that deduction limit, you also have to make sure that you don't have any unused RSP contribution. So those would be contributions that you've made in previous years, but you haven't applied them against your income. And that's where sometimes people can get into trouble as to being in an over contribution situation, because they'll look at their deduction limit and go, oh, great, I've got X amount to put in, but forgetting that they've already made RSP contributions that hasn't been claimed against their income. So that's where the unused RSP contribution is very important to take a look at. And if that unused RSP contribution is greater than what your RSP deduction limit is, then you may be in that over contribution situation. So always important to take a look at your notice of assessment before even making an RSP contribution. But this will tell you if you're in that over contribution situation.
Okay, perfect. So obviously it's a pretty expensive experience at 1% per month. So you want to get it dealt with as quickly as possible. So maybe you could walk us through, okay, now I'm aware that I'm in an over contribution. I've got maybe a notice of assessment as well that's alerted me to the fact that I'm in that situation. What are the next steps that I need to pursue?
So basically there are three options that we can take a look at when we want to remove or, take out that over contribution situation, right? So if we take a look here, we've got, option one is we send a request to CRA to have that excess amount redeemed, and there's no tax withheld in that situation. The second option would be you request that your financial institution withdraw that RSP, or you withdraw that excess amount directly from your RSP. So that's immediate. And I'm going to go through the other steps in more detail, but we just want to kind of give you the three steps here, or the three options, I should say. And so basically the last option would be do nothing. And that's dependent on when you made your over contribution. So any contributions made in the first 60 days can be applied for the previous year's contribution limit or the current year's contribution limit. So if you've kind of went, oh no, I've put in more in my first 60 days, my limit was 5,000 and I've added an extra 2,000 in the first 60 days, no worries, because you can apply that 2,000 to the current year's contribution. So you will likely have, accumulated more RSP room that you can apply it against, depending on the fact that you are working on a year-by-year basis. Now, if you're in your last year and you've now retired and you add that extra 2,000, well, then you may need to take that out if it's over that $2,000 limit.
So the bottom line is basically if you've, like you said, made an over contribution, you find out about it in the first 60 days, you could take that over contribution and apply it to the next tax year and just handle it that way. But if you're in the period basically from, early March right through to December, that's the period where you might have to make some decisions on how you want to handle the over contribution. So you said you're going to walk us through each of those options in a little more detail?
Exactly.
Okay, so let's start with the first option, which is the one that you had prepared for us on the screen here. So we're looking at send a request to CRA. So let's go to that right now. So is that is that what this one's about? Request to have the excess amount redeemed without the tax being withheld?
Exactly.
Okay. Do you know offhand? I guess one of the questions I would have on this option is, do you have any idea how long it can take? I guess you make the comment it can take several months for it to be approved.
Exactly. We all know how quickly CRA can look at your file and deal with things. So it is a slower process to get this looked after. So depending on the dollar amount that is in an over excess kind of situation, you may be okay with the fact that, you know what, I'm okay with it taking a little bit longer to remove that. But just know that the penalty of 1% per month will accumulate. Regardless of which option you're taking, it accumulates up until the point that it actually does get redeemed. So even though you're sending this request to CRA to have that excess amount redeemed without any tax penalties, you're still accumulating that 1% penalty cost during that time period. So it's one of those things where you kind of have to either look back and either discuss it with your financial planner or your accountant, discuss it with a professional, and just go, okay, what are my better options? What's my pros and cons? And will it cost me more to wait? Or do I just, do that part of it? So it's not a straightforward, this is the way you should do it. Everybody's situation would be different.
So, I mean, basically, if that's the case and it takes several months, that's obviously a big deal. So one of the benefits of this first option is you're going to get the money out without having to pay tax back in your hands.
Yeah.
Great, right? That's the ideal. I'm made whole again and no issues. But if it's taking 4 or 5, 6 months and I'm getting a 1% per month penalty tax on that, that's not great either. So do I want to go through that process? So that's the one downside of that process. Sounds like a great option. Fill in the form, get your contribution over contribution back. You're not remitting any taxes to CRA, that you're all good, but there could be delays there. Okay, let's go back to the slide. And I think that maybe what we'll do is we'll just go through just each of the steps you've listed here.
Exactly. So if this is the process that we're taking, basically there's a T3012A form that needs to be completed. You actually need to do 4 of that form.
Okay.
because all four of those will be sent to CRA. And then once CRA reviews it and they approve it, then they return three of those signed copies back to you.
Okay. Okay.
Those signed copies then need to be forwarded to your financial institution so you can process that redemption. So they can actually process the redemption for you.
Okay. Perfect. Um, so that's option number one. This is the form. There's multiple copies. You're made whole. You get your money back. They're not holding back any tax, but the downside is it can take several months, and while the money's in there, it's getting hit with that 1% per month penalty tax.
Exactly.
Okay, perfect. Okay, now we've got the request that your financial institution process an immediate withdrawal. The downside here, like you mentioned in the slide, is taxes withheld. So maybe walk us through this particular option.
Yeah, so basically here, the one benefit of doing it this way is that as soon as you take that withdrawal out, then you're no longer getting charged that 1% penalty for that excess amount that is in that over contribution situation. But like you said, tax will be withheld because you are redeeming it from your RSP account. And tax is withheld based on a percentage of the dollar amount that you take out. So if your over contribution amount is over or up to 5,000, then they'll withhold 10%. Anything between 5 and 15, 20% is withheld, and anything over 15,000, 30% is withheld. Now, the one thing to note is that there is a form that you will complete when you file your tax return to make you whole so that no net income is included on your return and that withholding tax amount is refunded back to you. So you would need to complete a T746 so that CRA is aware that this RSP withdrawal is because of an overcontribution amount. So although tax is withheld when you take it out, you will be made whole when you file your tax return in the following year.
Okay, so that's a helpful overview, Milan. So if we want to get that money out right away so we're not getting hit with the penalty tax, that's the process for doing it. You have to make sure you make note to self that when you file your tax return, you'll have to submit this form and then you'll get money back for that tax that had been withheld previously. So you do the redemption in June of the year, you hold back tax. Now you're in April or March of the following year doing your tax return. So it's not until then that you get the money back. So you've effectively allowed CRA to have that money. They make money on your money. You're not making anything on it. So that's the process. Okay, so let's go to any other comments to make on that particular part of the process?
No, and as I've mentioned before, it's always good to look at it on a case by case basis just to see if your situation is best to do the withdrawal right away
Yeah,
or to do it via the form and the request to CRA.
yeah, exactly. Okay, now we're getting into the calculation for the penalty costs. So again, there's a little bit of detail here. Maybe walk us through each of these bullet points you prepared for today's discussion.
So basically, regardless of the option that you choose, either using the form request with CRA or pulling the money out, there will be a penalty of 1% per month on that excess amount until it is redeemed. And one thing to note is regardless of when you redeem it in that month, you're still going to get charged for that month, right? So it's just know that if you have an overcontribution amount in that certain month, you will get charged that 1% fee. Now, the way that you calculate that fee is by completing a T1 OVP. And that T1 OVP can either be completed by yourself, your accountant, or you can actually request that CRA calculates it for you. If you want CRA involved, you will need to forward them all the details in regards to your over contribution. So that it would include when you've made those contributions, for what dollar amount. You'd have to include the details of the withdrawal. So when will the funds be redeemed, the date, the amount. And then from there, you take a look at that T1 OVP. And when you look at the form, it actually goes on a month by month basis. So you're actually filling into the form every month that you're in that over contribution situation. and then you're able to calculate how much do I owe. So that penalty cost, there is a deadline. You do need to pay it 90 days after the end of the calendar year. So one thing to note is that typically it would be March 31st, but on a leap year, you're kind of looking at a different date there, March 30th. Now, one thing is that penalty cost. In certain situations, you may be able to waive it by sending in a request to CRA and just explaining to them why you may have been in that over contribution. So if it is because of a reasonable error and you are in that process of redeeming the excess amount, they may actually waive that penalty. So it's always a good exercise to go through at the same time and send that in to them and just see if they'll waive it for you.
I
Because
think that's a
depending
really
on the dollar amount and your penalty, you could be looking at, between hundreds to thousands of dollars of being in a penalty. So if you can get that waived, then you might as well go through the exercise to see if you can get it waived.
Yeah, it's a good recommendation. We've had, you can attest to this, Milan, we've had clients who unintentionally made, over contributions. It's a practice of ours to ask people for their notice of assessment to confirm room, but we don't always get those notices. And clients go, yeah, I've got the room. And then for some reason they go over. And we've had experiences where CRA has been accommodative. They've basically taken a look at the situation. It's clear to them that this was not intentional, and they've waived the penalty fee. So yeah, I would agree. It's completely worth looking into. At least letting them know the background, the context. You might find that they'll waive it for you.
Exactly.
Now, this is the letter or form you use for that explanation. RC.
Exactly.
Okay.
Yeah, so you can either write a letter to CRA or you can use the designated form that they have. So it's an RC 2503.
Okay, perfect. Very helpful. Okay, so I hope that gives everyone a basic starting point in terms of the process. I guess the next question is reasons why you may have made an RSP over contribution. I think where this is helpful is that we're not always exactly aware of the things that could trigger some of these over contributions. So if you're aware of them beforehand, maybe it reduces the likelihood that you'd ever be in this over contribution situation. So again, let's just take a look at that slide and you can go through each of these points for us. Okay, here they are here.
So some of the reasons why we may be in that over contribution is that you participate in a group RSP contribution plan. So what happens is the employer's making contributions and you're making contributions to the group plan. And there could be a time that there's an adjustment being done, the percentage different. You may have thought, oh, my limit is this, and then they're continuing to make contributions, but you've already maxed out your RSP contribution. So there could be that. So again, always good to check your notice of assessment, see what your room available is, and then look at what your salary income is, what percentage you're putting in towards your RSP group plan. And then hopefully that will kind of limit that. Same thing with the pension adjustment amount. So if you're part of a defined benefit pension, there is an amount that will reduce your RSP room available, and that's your pension adjustment amount. So again, important to take a look at your notice of assessment to see what your RSP available room is. And then alluding back to what I had talked about at the beginning of our discussion today is not accounting for your previous year's unused RSP contribution. So that is one that we see a lot in our practice is that we'll ask clients to provide us with a notice assessment, or they just look at it and go, yeah, here's the room that I have available, not realizing that that unused RSP contribution room is also very important for us to be notified of. So that way we know your RSP room available is, let's say, 8,000, but you've already put in 2. Well, now we need to reduce what your actual room is by that 2, and now you're only allowed 6. The other point would be a retirement allowance or a severance payment transfer. So again, assuming that you have X amount as an RSP contribution limit and you transfer more into your RSPs, then that limit is from your severance payment or your retirement allowance. And that's another one that we've seen as well in regards to being in an over contribution situation.
Correct me if I'm wrong. I think one of the issues with pension plans and pension adjustments, sometimes we've even seen impacts on pension adjustments when there's been some changes to the pension plan, and then they've had to readjust the pension adjustment number, and yet clients kind of kept going on with monthly contributions or contributions to their RSP, assuming that it was just status quo, but it's not
Exactly.
always status quo. So I think that one of the important points is if your collecting bargaining unit or your employer is making adjustments to the defined benefit plan, just have some spider senses that potentially that could impact your pension adjustment, which might reduce the allowable that you could make to your RSP for the year. Well, thank you, Milan, so much for walking us through the basic steps that we need to be aware of when it comes to RSP contributions, particularly as it relates to over contributions. Very helpful. And for those of you watching it, if you're not clients of our practice and you're interested in find out more information about how you could find out more about our services, make sure you visit our website, humphrieswealthgroup.com. You can also find out how you can get a complimentary retirement snapshot. And we have our complimentary retirement planning resource bundle, which is full of resources to help you be a little more clear about your retirement planning journey. So thanks again, Milan.
You're welcome. Thanks for having me, Shaun. This was hopefully beneficial for everyone.
Okay. Bye, everyone. Take care.